Hello and welcome into the KE Report. Shad and Corey here, getting an update on Minera Alamos, traded on the TSX.V under the ticker MAI and on the OTCQX under the ticker MAIFF. And we're joined today with the president of Minera Alamos, Doug Ramshaw. And Doug, it's always nice getting you on the show to get an update on Minera Alamos. And when we talked, we were remarking off mic that a couple months back in May, we had you on the show and you were laying out what the plan was for this year at Santana and that you were going to be ramping up mining in June. And sure enough, you put out a press release here on July 18th that you did ramp up mining in June and you've started the stacking of ore that you've been ready to put through on the leach pad. You're getting the mining built up, you're getting the reserves built up. Give us an update on how things are going now that mining has commenced again at Santana.
Sure, Chad. Yeah, I mean, that release last week was one of four we've done really on Santana. February, we announced, hey, we've got a plan, resequencing how we're going to mine the Nicho Main Zone pit and utilize existing pad capacity to get operations moving forward again after obviously 2023, where we scaled things back. April, we announced that we finalized or just about finalized that plan with our mining contractor. We wanted everyone on the same page. And so, yeah, when we last spoke, it was at the end of May after our Q1 financials, where it was like mining will commence in June in earnest. And so, none of these press releases in their own right are meant to be earth-shattering by any stretch, but it's very much a conscious effort on my part to get back to something that I know has not been as good as it once was, and that was delivering accurately in terms of timelines on what we said we were going to do. It's something I used to be incredibly proud of, and there's been a lot more fluidity in Mexico and during the pandemic where it was much harder to be accurate or as accurate as you want, and so things were much more best guesstimates rather than something we had control of. And in many ways, I think these four releases should, if nothing else, send the message. This is something that we are in control of. And as we do say we're going to do stuff, there should be that increased confidence that there are deliverables, from those plans. So, the kicking off of mining in June, and we included some pictures in that release because it's worth understanding. You can look at whether it's a Barrick or a smaller company with a pit. You go in their presentation materials on their website, open pits look like giant holes in the ground, but they don't start off that way. In some cases, it's flat ground and you're digging a hole. In other cases, like Nicho Main Zone, you're actually taking the top of a hill down first. So you kind of get your mining scalpel out and you are carefully taking down the top of the hill before even a pit, a hole in the ground appears. That's very beneficial for strip ratios and everything else, but it also means that there is a ramp up of mining activity. And what we try to show in the pictures in that release was, here was us kind of taking the top of the hill down on May 4th in preparation for the mining to commence more fully in June. And by June 20th, you're seeing something which looks much more like kind of a side-on view of a quarry with multiple trucks. As one truck is heading off after being loaded up, there's the next one coming. And we said in the release we'd be looking to add a couple of trucks in July to get up to our maximum fleet size. You can do that as the pit opens up, where you've got more mobility, more access for equipment, more space for things to work. And the plan will be to actually have two active working phases in this pit, which will help with minimizing and sequencing stripping of waste over mineralized material. And very quickly, we're getting up to kind of a 1,500 kind of ounce monthly mining and stacking rate, and it will increase from there. That's probably going to be the minimum on a go forward basis. The plan was 25,000 ounces over a 12-month mining window, so obviously it will still increase from there, but it meant very rapidly we were getting up to kind of an 18,000 ounce annualized run rate. So very happy with how things are going to date, and the benefits of which should be felt in Q3 with regard to inventory building up on the pad, more leaching of gold with the benefits of increased gold production, maybe towards the end of Q3, but certainly Q4 and moving forward. And we also have a plan that beyond this 12 months, everything about these 12 months is obviously to get meaningful gold production back up and running again, but it's also about working down there to ensure that at the end of that 12 months, there's runway for multiple years, at least at a minimum, this kind of production rate. So far, so good through the first, almost 7 months of the year. This was meant to be a better year for our shareholders that have stuck with us from 2023. And I think so far, operationally, it's delivering on that, and we'll see the benefits come through in due course.
So, Doug, you mentioned that big picture, 25,000 ounces in that 12-month mining window. You broke down just where you are now. It started off a little slower, but you are growing these numbers. You even had in that news release. Next month, you're projecting about 1,300 to 1,500 ounces to be placed on that heap leach pad. Do we need to adjust this 25,000 ounces in 12-month window? Does that get extended a little bit with the startup?
No, no, it was always a 12-month mining sequence. We could do it quicker. We felt like it was important to have appropriate runway so that we can plan for what's going to happen beyond that 12-month window. But no, the slower start in the first couple of months is really just a function of the pit opening up. As the pit opens up and you have more working space for the trucks and stuff to move around, your mining throughput increases too. So no, this doesn't delay. There's no delay here, and that we came across at the front end. It's just a natural part. We saw it when we first opened up the Nicho Norte pit. It goes through the exact same kind of first few months and then gets up to kind of a sustainable mining rate as the pit opens up. So that's still the 12-month plan is intact.
Well, and Doug, what could you say about Santana as far as beyond that 12 months, as far as expansion potential?
Yeah, we're working with authorities down there. There's a path that we're working with our permitting consultants that should see us be able to expand pad capacity beyond this 12-month period. And it's one of the reasons we might need a bit of time to finalize that, but it was one of the reasons we just looked at the mining rate and said it's best to have this plan over this 12-month period. So you're not mining aggressively only to slow things down whilst expanding a pad. We feel comfortable that we'll be able to, during this 12-month window, look at the next phase of pad expansion. It's not something that we'd have in a press release until we're ready to do that. But it's definitely one of the reasons we looked at it and said, let's give ourselves appropriate runway on the resource that we're mining now, utilizing the existing pad capacity, and have this plan in effect well before that 12-month window is out so that we kind of seamlessly move beyond this current operational plan into the longer term plans we have for Santana.
So from a cash generation and cash flow potential, there any significant costs that the company is going to have to incur within this 12-month mining window or after that 12-month mining window when you look to expand?
No, the next phase of pad expansion is about similar kind of amount of pad capacity we initially built, which was about 100,000 square meters, or call it about 25 football fields in size. So it's a big second phase pad expansion. That's a $2 to $3 million sustaining capex that I think every single shareholder will welcome, because it's obviously going to pay dividends for years to come. One of the beauties of heap leach is the sustaining capital is quite minimal. That's something that we can accommodate with our existing cash and an undrawn working capital facility. And it doesn't have to all be done in one phase. It's not like you're laying out, even when we laid out the original 100,000 square meter pad at Santana, we were mining and leaching gold at the front end of the pad with probably 70% of the pad liner knocked down. So you're actually incurring that $2 to $3 million over a fair amount of time. and should be supported by, the free cash generation of the operational plan we have right now. So we feel pretty comfortable on the balance sheet, and that's because we've gone to great effort to protect the balance sheet to allow us to be in a position to expand in 2024, and that made for some tough decisions in 2023, but they were the right decisions to be made.
Well, Doug, just to that point, just remind people that when you pulled in your horns a little bit in 2023, where the cash position of the company still is today before all this cash flow even starts, and that you mentioned the credit facility, just mention how that gives you some optionality moving forward.
Yeah, I mean we're probably north of, as of kind of end of June after that first month of increased mining activity, we're probably circa 9 million in cash, give or take, 500,000 one way or the other, and we have an undrawn working capital facility of $3 million. So which is good because you incur costs as you start mining, but with the leach cycle, you don't necessarily see the gold for 45 or 50 or 60 days thereafter. So you always want to be able to have sufficient working capital to meet the increased costs of upping your mining rate, upping the amount of gold that you're mining and stacking ahead of that increased gold production that comes on a slight lag as a result of the leach kinetics. It's something that our team are very good at positioning for and understanding those leach kinetics and the impact on cash flows. But this is good money being spent right now. It's going to lead to increased gold production, which I think all of our shareholders that stuck with us in 2023 are desperate to see, as are we as management. So, you have to spend something to make quite a bit more than that back in terms of gold production. And certainly our costs are, in 2022, when we had an $1,800 gold environment, our direct cash costs were circa 900 US an ounce throughout that whole year. Obviously, I don't think our costs have increased, that dramatically from that level. They might be up a little bit, and we'll see once we get up to kind of a sustainable production rate, we'll have a clearer idea of the current costs when they're spread over an appropriate amount of quarterly production, because there is a lot of fixed costs there. So if your production rate's lower, those fixed costs are still fixed. So I think as production increases, we'll kind of normalize a cash cost down there, which is going to be incredibly competitive and give us great margin for generating the very free cash flow that we want to get back to. This is about building cash back up from a successful Santana operation, and Nicho Main Zone is kind of the current prize down there. It's a few 100,000 ounces of very low strip, good grade gold that can generate a considerable amount of free cash flow. And arguably, although I'd like to have been producing more last year, I'm kind of happy that the gold, when we're producing it, we'll be producing it in this kind of plus $2,300 gold environment.
Yeah, that could time well for you, but tie it all together here. We've kind of danced around this aspect, but Santana, when it is up and running, kind of as your startup plans dictated, is this going to generate significant cash for the company to add to your balance sheet to help with growth moving forward?
Yeah, absolutely. And I've always looked at Santana, our first mine, small mine, $10 million Canadian capex. I've always looked at it and said, if all that mine ever does is $10 million a year of fresh cash generation, wow, has it served its purpose? If it can deliver its capex in free cash every year, that's a fantastic ATM for a company of our size to have. Can it do more than that? Absolutely. I think future growth in free cash generation will be dictated to by expansion of the pad. But this plan we put in effect this year, this 12-month initial mining plan, was all about getting back to building cash on the balance sheet. And Santana, with the cost structure we have in Mexico, in this current gold price environment or a lower gold price environment, is designed to do precisely that, to build cash up.
Well, Doug, with my number one chugging along and starting the process of building cash back up on the balance sheet, Let's get a quick thought on mine number 2, Cerro De Oro. I'm sure people listening want to know just roughly what the update is. I know much of this is in the hands of the elections in Mexico and the changeover, so maybe also give us an update on how you're looking at the political landscape in Mexico now.
Yeah, Cerro De Oro, we're back and forth with Sermonat, the environmental agency there. Good communication with them. It's in a great part of Mexico, a state that is very supportive of mining, a local governor and state senators that are supportive of mining. So everything we're hearing on the ground is the project has been well received, including the most important stakeholders, your local communities and such that want to see that mine built. So we're just going through the process right now. That process continues. The elections probably didn't give investors what they crave, which is clarity, right? After a couple of years of murkiness where everything seemed stalled in Mexico, in a particular area that Mexico used to excel at, which was permitting, that murkiness continues through this kind of transition of leadership of the Morena party and the Morena coalition. But we've already seen some moderating language from the president-elect during the campaign trail, where she echoed much of AMLO's positions on things. But she has already, I think, taken a more moderating stance and talking about the importance of Mexico copper and lithium mines for the future of the EV transition and the like. Well, those are going to be open pits. So I think we will see, and most people we talk to on the ground down there see a moderating of this kind of bombastic, noisy former political backdrop where everything was conflated to, no new holes in the ground. No, I think the mandate will be for strong environmental regulation and approval process for new mines, rightly so. I think not just Mexico, globally, we should be looking at mines that can have a positive impact at the local level in terms of employment and the indirect benefits of mining, but also not have a negative impact on the environment and on water requirements and everything else. So I think projects that can meet both strong local support and be done in a non-destructive, as much as mining can be non-destructive, but responsible mining approach. Those are projects that, we and local stakeholders shouldn't fear about not getting advanced. And there are projects in Mexico, there are the problem child projects of before AMLO's times that are in incredibly environmentally sensitive areas or areas of incredibly low water availability that probably, just like they were always destined for problems pre-AMLO, are going to continue to have problems. So we've always been very attentive to, if we're looking at an asset, does it fall in an area that should meet all the criteria for successful mineral development? And it's why we've avoided projects that have been made available by companies, for sale and the like, that we think, are for sale for good reason. There are undeniable issues with their location. And so, we still feel very comfortable about Cerro De Oro being another mine that not only helps, yes, our shareholders, and it would be a huge boon to our shareholders, but also helps all levels of stakeholders in Mexico too.
Well, Doug, we'll keep following along with more news as it comes out from Minera Alamos. But I will, for people listening in or listening in on our podcast network, include some of the photos that is in this press release so that you can actually see the yellow trucks driving around and the benches that are made at the Nicho Main Zone. It's pretty exciting to see the process visually. And if you also want to see some of the photos, you can go directly over to the link below this interview. It takes you right over to the company website to the news section, so you too can read the whole news release. But Doug, great having you on the show. Keep us posted as more updates come. Nice to see the mining is up and running at the Nicho Main Zone, and looking forward to a better 2024 for Minera Alamos shareholders and for the production profile, and looking forward to our next conversation.
Yeah, thanks for having me on, Chet.